Hello students, welcome to YouTube channel Sun Academy. Hope you are enjoying interaction with me and learning from our lectures. Today in this lecture I am going to solve a question of profit or loss prior to and post incorporation in accounts, which is also exceptional question because 2 to 3 adjustment in this question are unique. As the given question is, Summer Limited was incorporated on 1/7/20 to purchase the running business of Darshan Traders from 1/4/20. Here 21 is written, but I will rectify it. It is 1/4/20. Following balances appeared in profit and loss account of the company for the year ending on 31st March 21. Administrative expenses 3,20,000. Sales expense 50% is fixed, which is 14 lakh. Salary 2,70,000. Manager salary 7 lakh. Donation 45,000. Interest on purchase consideration on 1/8/20 56,000. Bad debts 45,000 up to 30th June. Total is 1,10,000. Additional information is that average monthly sale for the first 6 months was 75% of the average monthly sale. The rate of gross profit is maintained 25% for the whole year, and cost of goods sold was 14,70,000. Manager was getting salary 50,000 per month from 1/8/20. He got 75,000, 7,50,000 per year. Fourth is up to 30th June, 3 employees were working, but it increased to 5 thereafter. Prepare a statement showing profit or loss prior to and post incorporation. Now, as you can see, all adjustments are exceptional. We will solve it systematically. First, we have to find time ratio. For pre-period and post-period. From 1/4/20 balance business has been taken and company started from 1/7/20 and accounts are closed on 31st March 21 and pre-period will be from 1/4/20 to 30th June 20. So 4th, 5th, 6th, that means 1/3 will be time ratio. Then after we have to find turnover ratio. Average monthly sale for the first 6 months was 75% of the average monthly sale. So from April, May, June, July, August, September, October, November, December, January, February, March. See it carefully. Suppose every month average sale is 1. But for the first 6 months it was 75%. That means 0.75 it is. Now our pre-period is 3 months and post-period is 6 months. So this will be 2.25, 2.25 plus 6, 8.25. That means 225 ratio 825. If I divide 825 divided by 225, 225 divided by 25, that will be 9 ratio 33, and that will be 3 ratio, turnover ratio will be 3 ratio 11. How is to be done? For each month, suppose the sale is 1 average sale. Now it has been said that for the first 6 months it was 75%. So for the first 6 months it will be 0.75, and then after it was 1 for the remaining 6 months. Now pre-period is 3 months and post-period is 9 months. So for the first 3 months it will be 2.25, and for the rest 9 months it will be 6 plus 2.25, that means 8.25, reducing, which will give us a ratio of 3 ratio 11. How? First of all, I cancelled the point. Then after I divided it with the table of 25 to each, and we got 9 ratio 33. Again it was divided by 3. So at last we got the ratio of 3 ratio 11. Then after, what we need to find? A gross profit. The rate of GP is maintained 25% for the whole year. Cost of goods sold was 14,70,000. Suppose sales is 100 minus GP 25%, 20. So the cost will be 75. So against 75, it is 14,70,000. So against 25, what will be the amount? 14,75,000. Sorry, 14 lakh, it is 1 crore 47 lakh. It is 1 crore 47 lakh. So 1 crore 47 lakh divided by 3, it will be 49 lakh. 49 lakh will be the GP. How? Sales is to be suppose 100, gross profit is 25, so the cost of goods sold will be 75. Against 75, it is 1 crore 47 lakh. So against 25, it will be 49 lakh. Then after, we have to bifurcate manager's salary. It has been said that manager was getting 50,000 per month. Again, so for April, May, June, 50,000 into 3, 1,50,000. From July, August to March, from 1/8 he received 7,50,000. Here on he is receiving 7,50,000 per annum. So divide by 12 into how many months will it be? 8 months. August to March, August, September, October, November, December, January, February, March. For the 8 months he will receive 7,50,000 divided by 12 into 8, 5 lakh. Plus for the month of July he will receive 50,000. So his post period salary will be 5,50,000. Then after, employees. employees are to be bifurcated for salary. First it were 3 employees, so for the 3 month 3 employees it will be 9, and for the remaining 9 months they were 545, ratio will be 1:5. Salary is to be apportioned in this ratio. Now what we will have to apportion first, gross profit in the ratio of turnover. Gross profit is 49 lakh and turnover ratio is 3:11. 10,50,000 is the gross profit for the pre-period, and for the post period it will be 38,50,000. Then after is sales expense. First fixed, then after fixed expenses will be in the time ratio, while variable in turnover ratio will be distributed. Expenses are 14 lakh, so 7 lakh in the ratio of 1:3. Time ratio 1,75,000 into 3, 5,20,000, while remaining 7 lakh in the ratio of 311 divided by 14 into 3, 1,50,000, and 5,50,000. 150 and 550, half in the ratio of time and half in the ratio of turnover, because fixed expenses are always distributed in the ratio of time, while variable it are allocated as per turnover ratio. Then after manager salary is salary as given, that means in the ratio of 1:5. Salary is 2,70,000 divided by 6 into 270 divided by 6 into 1. So first it will be 45,000, then after it will be 2,25,000. As we found the ratio for that. Then after manager salary as given, we have found that manager will get for the pre-period 1,50,000 and for the post period that is 5,50,000. While then after donation is always, we know, post period expense. Donation is 45,000. Then after interest on purchase consideration, that will be on 1/8 has been paid on 1/8. So for the first 3 months it will be in the pre period, and in the post period it will be for 1 month. So 1:3:1, 42,000 and 14,000, total is 56,000. Then after is bad debts, as given. 45,000 is up to 30th June. So 45,000 for the pre period, total is 1,10,000. So 65,000 for the post period. Now all expenses have been allotted, no expense remains unallotted. Now we have to find the net profit. 10,50,000 minus 1,75,000, 150, 45, 150, 42 and 45. Net profit for the pre period is 4,43,000. Sorry, it will be written here. Total will be 10 lakh. $50,000. Here total will be 38,50,000. Now from 38,50,000 expenses are to be subtracted. 5,25,000 minus 550, 225, 550, 45, 14 and 65,000. 18,76,000 be the profit of post period. So these kind of unique sum are to be solved very carefully. Very carefully you have to find the ratios which are given typically. Now if I repeat some points, first point I will repeat is to find turnover ratio. We allotted one sale to each and every month as an average sale. It has been said that for the first 6 months it was 75%. That means for the 3 month of the pre period it was 2.25. For the remaining post months it will be 8.25. At last we concluded it onto 3:11, and we found the GP as GP was said to be GP was said 25% maintained, so 75% will be cost. Here cost was given 75% is this, so 25% will be this. Then after manager salary, manager was getting 50,000 for the first 4 months. Then after he received 7,50,000 for 12 months. That means for the 3 months he will receive 150, and for the remaining month 50, and 750 for 12 months. For 8 months it will be 5,50,000 will be his salary. And at last adjustment was employees. For the first 3 month pre period, 3 employees were averagely working. That means for the 3 months 9 employees were working, and for the remaining 9 months 45 employees were working for the company. So the ratio will be 1:5. In this way, expenses which are to be allotted as per time ratio, I allotted them, and which were to be allotted as per the turnover ratio were allotted as per the turnover ratio. Now, the point was a sales expense 50% were fixed, so fixed expense were allotted as per time and 50% variable as per turnover ratio. And then after from GP, all expenses were subtracted and we found the net profit. Donation, as we know, always is a post period expenses, and interest on purchase consideration was to be distributed in the ratio of 3:1, as interest on purchase consideration was paid on 1st August. So post month was 1 and pre month were 3, so it was distributed in the ratio of 3:1. Now student, if you like my lectures, do follow, do comment, do share our link so that many more can learn from our channel.